So those of you who were with our presentation before, you may be thinking to yourself, we've covered internal controls before, and we have, but we just felt like with the importance of COVID and pandemic considerations, it's always important to reiterate internal controls and just to retouch base on those. That's what we've done here today, is just try to take some internal control considerations for you and just some items to think about and just to circle back to internal controls for you. So on the next slide, just a little bit about myself. Again, member of the firm. I've been here for 17 years. For those of you looking at the PowerPoint, it did say 16 years. Yesterday was actually my 17-year anniversary. I think back to my first day, and the boss came to me and said, you know, you should really sign up for a 401k. And I responded, there's no way I can run that far. So that's my one joke that I have. I promise no more bad jokes, but I've been with the firm. I'm primarily focused on local governments. So what I have for you here today when going over internal controls, the first one here are just a couple key concepts to keep in mind. And ultimately, I think as we go through internal controls, you just want to kind of keep these concepts in mind and try to circle back to these at all times when you're thinking about your internal controls. So ultimately, an internal control, it's a process. It's ever evolving. It's not something that you can put in place, move on and think that it's going to be in perpetuity, that you're going to be using those internal controls in the same form or fashion. And when I was reading about internal controls, I came across this line, and I feel like it really, again, speaks to what an internal control really is. And it's ultimately a means to an end, not an end in itself. So I think that's important with internal controls. Again, it's ever evolving and should be reviewed on a regular basis. Internal controls can also be affected by the people that are involved in those processes. You could have two different people performing the same internal control, but obviously they could have a different flavor that they put on the control, or maybe they look at something with a little more scrutiny than another person would. So again, they can be affected by the people. And again, it's not just a manual or form that's put in place as related to internal controls. And then finally, I feel like anytime you talk to an auditor, the terms assurance gets used, but it's true as well with internal controls. And again, they can only be expected to provide reasonable assurance and not absolute assurance. You can have the best policies and procedures in place, but again, there are certain ways to circumvent that. And again, internal controls only help to provide that reasonable assurance and do not provide absolute assurance. So again, just as we move through internal controls, try to keep these three key concepts in mind as we go through these. So ultimately, there are three different types of internal controls that we have, and these are pretty straightforward, but I'll just touch base briefly on each of them. And basically, they're exactly as they are described there. So the first type is a preventative internal control. So that's obviously a control that you're going to have in place to prevent something from happening. So the most common example that I can think of is if you have cash disbursements and you require 2 check signers, you're preventing one person from creating a check that they shouldn't be preparing. And again, that's preventing that from occurring. You also have detective internal controls, and those are ultimately going to detect an error. So if you have a fake invoice that's coming through and that needs to be approved by a manager before it's going to be paid, obviously that's going to detect that if that is denoted and ultimately determined to be a fictitious invoice or not a real invoice that should be paid. And then finally, the last portion of internal control, or the third type, is what's known as a corrective internal control. The most common example I give for this is if after the transaction has been recorded, maybe it's recorded in the wrong general ledger account. So by reviewing a budget versus actual on a regular basis, that'll help you to ultimately correct that. Maybe you budgeted for a certain grant revenue and it ultimately got recorded in the wrong account. Again, that corrective internal control is going to help to determine that and make that correction within the general ledger so that can be appropriately reported going forward. So as we talk about internal controls, ultimately there's 5 key elements that are related to internal controls. I think a lot of times when people hear the word internal control, they focus on the top middle one, and those are the control activities. And those are the most common, and we'll spend the most time talking about those. But there are other elements as well that go into the internal controls. So the first one that we have, and we'll go through all 5 of these, and you can just see them listed there, but you have the control environment, the risk assessment, the control activities, which I previously mentioned. You also have information and communication, as well as monitoring. So we're going to go through all 5 of these. These kind of move left to right. So we'll kind of dive in here to the control environment. So that's the first element that we'll walk through and just go through the impact that it ultimately has on internal controls. So what is control environment? And I think at the top here, no pun intended, but that just sets the tone at the top for the organization, and in setting the control environment for the organization. How do you do that? How do you set that tone at the top? And I think it really comes from two places. It's not just management, but also the board that's involved with your organization is going to help determine and set that tone at the top. So I think you can do that through a couple different factors that we have here. The first is just trying to establish that culture of honesty and integrity. I know that sounds very basic and it sounds very simple, but obviously that has a significant impact on the organization itself. If an employee is hired and they don't see that culture of honesty and integrity, they're probably not going to be honest or have integrity either. So from that standpoint, it's obviously important to establish that culture of honesty and integrity from the beginning. And you can do that through establishing a code of conduct or a code of ethics. I think most organizations have that. Again, most of them, I think, may have implemented that many years ago and maybe haven't revisited that. So it's obviously something that can be worth circling back to and just verifying that the code of conduct is up to date and that the employees understand that. I think those two items really create a positive workplace environment, which again is ultimately setting that tone at the top and establishing that culture. I think another key element, and we'll touch base on this in a little bit as well, but it's just related to establishing a whistleblower policy, especially for the larger organizations. If it's a smaller organization, it's harder to have that sometimes. But I think as long as the employees have a way to report something that they may think is occurring that shouldn't be, that they have a way to communicate that either to management or to the board. So having a whistleblower policy and having a way for them to communicate that is ultimately important. And also, even before you get there, as you bring on new employees, what are the hiring techniques? Are there background checks performed? What does that process look like? Once they are hired, what type of training are they getting? How is the culture communicated to them? Do they sign the code of conduct? Again, a lot of different things at the time of hire can ultimately be reviewed and be shared upon. And then the last piece is just to have discipline. Again, by having that whistleblower policy, if something were to come up, obviously taking action on that is important. If something is occurring that shouldn't be and there's no action, there's no discipline taken for that, the other employees are going to notice that. Again, that's going to pull down all that culture and not set the appropriate control environment. So just to elaborate on that a little bit more are just some practical applications. Again, by establishing an anonymous whistleblower policy for the larger organizations, that just allows for anything to be reported and communicated that should be. Again, you want to revisit your current policies as it relates to the ethical behavior, i.e. the code of conduct, and establishing conflicts of interest as well as nepotism. And again, I mentioned that earlier, the third bullet point, where it just alludes to having discipline for failure to comply with policies and procedures. And again, that just, I think, ultimately helps to establish that strong moral code within the organization. And I know everybody here works for an organization in which competency is rewarded, but obviously that is important, and you want to keep that in mind. And again, if you are in an organization where maybe competency isn't rewarded, may just want to keep that in mind as far as the culture is concerned. And again, I think at the time of hire, just stressing the importance of internal controls for that, and just understanding and making sure that all employees understand that. The other piece of internal controls, and again, we'll touch on this a couple different times, but it's to require mandatory vacation in which somebody else completes all the duties. And I think what really comes down to, there's three key areas. There's the cash receipts, cash disbursements, and payroll, what I would consider the three key functions of internal control, or the three key areas. So you want to require mandatory vacation for somebody that's performing those duties, especially if there's only typically one person performing that. And I think I just heard the groans come through the computer about somebody else performing payroll for your organization, because obviously that's never a fun process trying to get somebody else up to speed or to complete that. But a lot of times if something fraudulent is occurring, when somebody's away, that's when that ultimately gets detected. So between that and the whistleblower policy, I think those are of utmost importance as it relates to internal controls. Another key concept to consider is just permissions to accounting software. You ultimately want to review who actually has access to that, and not necessarily just access, but should somebody have read-only access to it? If they need to be able to review something, but you don't want them to have the ability to make a change to the accounting software, they could ultimately have read-only access to that And that, again, that is additional control to allow them for that. The other thing to keep in mind are having unique passwords. I know in today's world, we all have too many passwords to keep track of, but again, you want to have unique passwords. They need to be able to be reset on a somewhat frequent basis. I know I dread the day that comes in and says you have 10 days to reset your password and try to remember what you didn't use the last time. But again, that is a very important control as far as the internal controls and accessing the accounting software, as well as just the general computer equipment. The other key thing, and again, I mentioned this about requiring vacation, but also just having a rotation of duties. Again, a lot of times if the misappropriation is occurring, it's ultimately being discovered by having somebody else perform those duties. And they have to perform the duties in whole. It can't just be a portion of it, or in other words, if the payroll person is going to be out next week and next week's a payroll week, you can't say, well, we'll do pieces of it and I'll finish it when I get back. Ultimately, somebody needs to step in and perform the full function of that, duty. And again, that may detect any misappropriations that are occurring. So again, those key functions that we consider, again, payroll, cash disbursements, and cash receipts, and fulfilling that full role when rotating those duties and having somebody else fill in. The next piece of internal control, or the next element, is what's known as the risk assessment. I know a lot of people maybe on the call may be CPAs and think risk assessment, well, that's up for the auditors to determine. And we certainly go through a risk assessment as part of our audit, but also internally, again, each organization should perform a risk assessment, I think does so informally on a regular basis as it relates to your internal control. And the next slide really dives into those details. And basically, the organization needs to ask itself, what are ways that fraud or misconduct can occur against the organization? And whether that's by employees, vendors, customers, or just the general public in general to be able to access any files. So what exactly does that mean? Exactly how does that risk assessment process occur? Again, I think step one on the left-hand side is ultimately to identify any potential fraud risks. So if something could occur, you want to identify what those could be. You're then going to move to the right and try to determine an estimate for the significance of that risk. Again, that fraud risk could be very minimal or it could be very significant. And again, that's just going to factor in to ultimately the controls that are put in place related to that fraud risk. And then you're ultimately going to assess the likelihood of that risk occurring. So those three items together, again, identifying that risk, determining whether it's significant or not, and how likely it is to occur, that's ultimately going to drive the internal controls that are set up, because obviously you want to mitigate those as much as possible. So by doing that, again, I think a lot of times the risk assessment process is occurring. It's just not something formally done, and again, typically done in an informal operation. So the key part that we have here related to internal controls, again, comes back to the control activities. So I'm going to touch base on this briefly, and then we'll circle back to it to get through the 5 elements here. But ultimately, what are those control activities? And again, I think this is what most everybody's used to when thinking of internal controls. And again, those are the policies and procedures that are put in place to ensure that the directives are being carried out on a regular basis. And then on the right-hand side are just some key control activities that occur. Again, reviews are ultimately important, whether it's financial reviews, operating reviews, and also performing of reconciliations. Again, most of you are familiar with the accounting process. It's not just a bank reconciliation, but also reconciliations of other balance sheet accounts, or whether it's income statement analysis, whatever that may be, it's just performing those reconciliations. And then the last 2 items, again, I think when you think back to internal controls, or the most common, you're thinking of the security of the assets and the segregation of those duties. So the segregation of duties obviously is important. And what exactly is that? I know that term gets floated around a lot. Somebody may be unfamiliar with that. But ultimately, what you're trying to do is separate the access of the physical asset from the processing of the actual accounting transaction. So again, we've broken down those key functions for your cash receipts. Again, that physical access to the asset, or the receipt, or the deposit itself, or the cash. And then the recording of that, whether it's in the general ledger or in some sort of customer ledger for that. So that's splitting apart, again, the physical access from recording of the accounting transactions. Similarly, on the flip side, we have the cash disbursements for your payroll. That could be whether it's payroll or regular, just cash disbursements as far as accounts payable are concerned. Again, you want to split apart the check signing for that, who has the physical access, and then who's recording that transaction on the general ledger, on the vendor ledger, the HR records for the payroll information. And again, that's obviously the accounting side of things. And then same is true for the bank reconciliation. Obviously, that's not the physical access to that, but it is an accounting transaction for the bank reconciliation as it relates to the cash activity. Next, and again, I will circle back to the control activities and give you more examples, but I just want to get through the other elements first. And it comes back to information and communication. So at this point, kind of in the process, the activity has occurred. You have your control activities in place. And where does it go from there? And ultimately, that comes back to the information and communication. So you've entered information into the general ledger or into the accounting software. Ultimately, you want to report on that. Obviously, that's the point of the accounting software. And you want to make sure that that is as accurate as possible and communicated in a timely fashion. When I say in a timely fashion, if for some reason you're doing reconciliations and those are several months behind, are those really providing any benefit to the reader of that information? And a lot of times that it may not be. If you're 6 months behind on recording your cash balance as well as your revenue and expenses, at that point in time, again, that's really not providing a whole lot of benefit as it relates to the operations of your organizations today. So again, just some key points to keep in mind there. The information, ultimately, you want to make sure that that is communicated timely and that the employees are carrying out their responsibilities so that that can be provided in a timely fashion. A lot of times, again, we get stuck on the accounting side, the financial standpoint of those reports, but there's other reports as well. There's operational reports, and there's also compliance information. As Krista covered previously, the federal grants, obviously, there's a lot of compliance associated with those federal grants. And the accounting software, a lot of times, again, is going to drive that compliance information. So you just want to keep that in mind as it relates to your internal controls. You're obviously relying on that financial information. Again, we'll just want to make sure that it's accurate and timely as far as the information is concerned. So the last component that we have is related to the monitoring. So that's the last category that we have. And again, what does that mean? And again, you basically have the control in place. You've already communicated the information. Now you're just keeping a high level overview to ensure that those controls are operating effectively on an ongoing basis. And again, the second bullet point that I have here, again, it's an ever evolving process. And again, you need to monitor those and make modifications as necessary to the ongoing operations and to the ongoing controls of the organization. So I just think it's super important that you're always thinking about internal controls. I'm not saying necessarily that you have your internal control document on your desk and you're reviewing it on a daily basis. But again, it's just something to keep in mind. And as the world evolves, as COVID-19 changes information, again, it's just an evolving process and always ongoing as it relates to the internal controls. So what exactly does that look like from management perspective? Again, I think a couple key controls or a couple items to consider when monitoring. First and foremost, to approve any non-standard journal entries, whether that's journal entries that are reported, credit memos. It's just those non-routine transactions that obviously there's some sort of approval process for those. Similarly, you want to have the appropriate review and approvals of transactions from management's perspective. So it's not just your AP clerk, but who in management's ultimately performing the review and approval of invoices. If you do have a cash receipts log, who's reviewing that? And who's approving the timesheets for the individual's employees. Again, it should be somebody approving those timesheets on a bi-weekly basis or weekly basis for those. And then management's obviously reviewing reports. You want to keep those into consideration, whether it's the bank statements, again, cash receipts, cash disbursements ledgers, or your payroll distribution report. So again, any report that's ultimately run, obviously there has to be a level of review and oversight for the monitoring for those transactions. So in addition, I know we may not have any board members here with us today, but the board oversight is very important as well. Again, what is the board's role? They obviously have a fiduciary responsibility to oversee the services and to oversee the operations of the organization. And again, I think up front, trying to develop what those expectations are, making sure they understand what they're looking at, why they're looking at it, and basically making sure they understand how that impacts the operations of the organization. I think most commonly, from a financial standpoint, the budget versus actual is what's used for that. A lot of times that's reviewed on a monthly basis, or every time there's a board meeting, you're comparing the budget to actual results. And again, you want to allow for time meetings for financial review for those board members to be able to review that. I think a lot of times I've seen a lot of boards, they're provided that information in advance, and that way they're able to kind of absorb that on their own. And then they're ultimately able to ask questions. And again, that's very important. We suggest that on a regular basis to be able to allow the board members to ask questions. And again, I think I just heard the groans come through from management when board members start asking questions. I know sometimes that can lead to headaches or heartaches, but again, from their standpoint, to be able to provide that fiduciary responsibility, obviously we suggest that they provide the ability to ask questions. So now I'm just going to circle back a little bit to the control activities. And this is part of the risk assessment / part of the control activities. But to ultimately ask the question, what could go wrong amongst those key functions? And I'm just going to touch base on the 3 key categories that we have. So starting out with the cash disbursements, what are some items that could go wrong here? And obviously payments could be made to fictitious vendors. They could be paid for the wrong amount. Duplicate payments could be made on an invoice and maybe they're paid to the employee on the second one, or disbursement could be recorded in the wrong period or recorded in the wrong general ledger account. So just from if you're asking yourself, or our internal controls cover what they need to, you ultimately have to ask yourself what could go wrong. And those are just some common examples from a cash disbursement side of things. So in blue, again, for each of these 3 categories, I just re-highlighted, again, what that definition of segregation of duties is. And again, that's limiting the involvement of one person that they have in that process. And what I tried to do here for the cash disbursements, and you can see it's listed out there, but try to separate as many duties as you can between the payment, making the payment, approving the invoice for payment, opening the mail, who actually is writing the check or preparing the check, who's signing it, and who's reconciling the bank statement. Obviously, for smaller organizations, it's hard to have 5 or 6 people involved in that process. But again, the more that you can split apart between the physical access and recording of the accounting transaction, that's what helps with the segregation of duties. The other reminder that I have here, I know procurement cards are becoming more and more prevalent. Obviously, you still need to have controls over those. I think it's very easy to pull out a credit card to purchase a transaction, but you still need to have the appropriate approval for those procurement card transactions. And on the flip side, at the tail end, you also all want to have support for each of those purchases, because there may not be an invoice for those if it's a point of sale purchase. So you want to be able to maintain the receipt for those procurement cards. So just a couple of suggestions to think about. Again, trying to split apart the segregation of duties. Who's approving the invoices? You can have somebody else open the mail to ensure that there's not fictitious invoices. And again, I think when it comes back to cash disbursements, and a lot of governmental entities have this, but you want to have dual check signers on all checks. And it doesn't have to be just management. You can also have a board member be part of that. I think if you do have a board member, you don't want to have that be a rubber stamp approval, so to speak. I've gone to board meetings, board members sit down and they just start signing for 10 minutes and they're signing checks and there is no real review. If they're reviewing a listing of it ahead of time and then they're just physically signing the checks, that's one thing. But obviously they want to be able to review those and make sure that they are legitimate. And again, having somebody reconcile the bank statements without any other cash disbursements or receipts duties is a proper segregation of duties for that. Payroll, very similar to cash disbursements. Again, you could be making payment to a fictitious employee, obviously less of an issue for the very small organizations that are on here. If you have 15 or less employees, obviously it's very easy to detect if there's a fictitious employee, but for our larger organizations, that could obviously be an issue. Also with payroll, again, you want to make sure that the appropriate pay rate and hours worked, including paid time off, is appropriately accounted for and paid to the employees. So those are the 3 most common items as far as what could go wrong with payroll. So what can you do to help offset that? And again, you want to use timesheets or time cards. You want to have a review or authorization of all time worked by each employee, again, including that time off. Again, who's physically signing the checks, if anyone? I know a lot of times a lot of organizations are moving towards direct deposit, and because of that, there are no checks to sign. So you still want to have the appropriate approval for that direct deposit that's going to be made. And again, who's ultimately reconciling the bank statements as well. So just a couple other considerations. Again, I wanted to highlight this first one here is to have all pay rates approved on an annual basis. And you'll see there, I put that to have the pay rate approved. We've seen organizations before where they may approve pay increases and say all employees are going to receive a 3% pay increase. Well, if you do that for 10 years, it's very hard to back into what their actual pay rate should be to go back to that beginning of time, maybe when they were hired, and at 3% annually on top of that. So we really just recommend for those pay rates to be approved on an annual basis and include that either within the board minutes or, again, maintaining that within management. Also, approval of timesheets and hours worked. And again, the key part there is the paid time off. If somebody works and takes time off on a regular basis, or if they took time off for that pay period, you want to make sure, obviously, that they're accounting for that and are using that PTO and not just increasing their hours worked and not ultimately using that paid time off. So from a cash receipt standpoint, again, just a couple things to be considered for considerations. Again, funds received could be credited to the wrong customer account. Again, more so for the authorities if you have water, sewer operations, but also for our townships if it's permits for other organizations. You could also have cash stolen by an employee and ultimately never recorded. And you also may have accounts receivable that may never be collected due to failure to follow up on those past due amounts. So from a cash receipts perspective, just want to keep each of those items in mind. So again, what can you do to separate those duties? Again, you want to try to split apart the handling of who's actually handling of the cash, who's receiving that, and who's making the deposit. So we really just recommend either a cash receipts log or a deposit log, who's entering it into the system, and again, who's reconciling that to the bank statement. We just recommend a couple reports there to use that daily cash report just to make sure that matches up to the deposit slip that's ultimately recorded. And again, you want to have the date of the receipt and date of the deposit as part of that report to be able to match that up. So just a couple other items to consider. Again, mentioned it before about the deposit slip or cash receipts log. Again, you want to create invoices for any amounts that are owed to the organization. And similarly, you just want to require receipt given to a customer for all payments that are received. So those are just key controls there to have as it relates to the cash receipts. So the last thing that I just want to cover a little bit is just as it relates to bank statements. Again, who's performing those reconciliations? And again, you can have those sent to somebody other than the organization. If you ultimately have a board member preparing that reconciliation, you can have that copy sent directly to that person's house, and that way they're receiving it directly from the bank. If it does show up at the organization, I recommend to keep it closed, and that way the individual that's preparing the reconciliation will be opening that, and that way the bank statement itself cannot be changed or altered in any way, shape, or form. And again, hopefully that's completed by somebody without any other cash duties. And again, like board members, the most common example. So just something else to keep in mind as far as the segregation of duties is concerned as it relates to a bank statement. Again, you want to try to have a review of that by somebody other than the preparer. And that doesn't mean that they need to recreate it, but rather that review should include scanning the cleared checks, which I realize banks are sending less and less copies of the checks with the bank statements. Maybe there's online access just to verify that the appropriate signatures are included on each of those checks. And you're also reviewing the endorsements, again, if you can view the check images, and just reviewing the vendors paid to make sure that there isn't anything out of the ordinary or maybe a vendor that shouldn't be paid. So just a couple other monitoring examples. Again, this is just a summary. I kind of like to pull this together from an internal control perspective. So basically pull all this together and what that could look like from the bank reconciliations. Again, we just talked about that in detail, but again, trying to have that reviewed by somebody other than the preparer. For cash receipts, again, another control is just to have the monthly comparison of actual receipts to budget. Again, that won't line up exactly. A budget to actual never works out exactly as expected, but it does offer a good monitoring tool for that. And if need be, you can regularly select some transactions to ensure that they're appropriately accounted for and the appropriate support is maintained. Similarly, for the cash disbursements, just on the opposite side of things, again, look at a budget versus actual on a monthly basis. Again, performing a reconciliation of the procurement card or a P card by somebody other than the card holder, and again, selecting transactions that they are appropriately reported. So just a couple last points here. Again, controls will change as the makeup and an account transactions change. I know with COVID-19, there's been a lot of changes made here recently as it relates to internal controls, and everybody kind of circled back to it. So it's always good to review that process. I think at a minimum, those policies and procedures should be reviewed annually. I know we typically do that as part of our audit where we ask about your internal controls and we sit down and go over that. Well, we just really recommend to do that maybe even without your auditors, and that way you're prepared when they ask those questions. And then finally, as software changes are made or as there's key changes within the organization for the personnel, you just obviously want to review those controls at that time period.